I want to ask you something before we get into a single number or a single form. When is the last time your tax preparer sat down with you and specifically asked about your age? Not your income, not your filing status, your age. Because if they did not ask, there is a very good chance they missed something. The IRS this year released 5 tax forms that apply specifically and only to Americans born before 1961. Not all seniors, not all retirees, people born before that specific year. And the reason most people have not heard about them is brutally simple. Your tax preparer does not look for what they do not know to look for. The county does not mail you an application. The IRS posted the forms on their website and called it done. I am Andre, and today I am going to hand you exactly what the system was hoping you would never find on your own. And before we go one sentence further, I need you to understand something about year end. December 31st is not a suggestion. 3 of these 5 forms cannot be applied retroactively after that date. The IRS does not offer extensions on these. They do not send reminders. Once the calendar flips, that money is gone for this tax year and it does not roll forward. So if you are watching this before December 31st, you are in the right place at the right time. If you are watching this after, take notes anyway, because 4 of these 5 apply to the return you are about to file right now. Now, here's the thing that gets me every single time I talk about this. Most seniors assume that if there was a new form from the IRS that could save them real money, someone would have told them about it. Their tax preparer would have called. Their accountant would have flagged it. The government would have sent a letter. And I understand why you think that. It feels like the logical way the system should work. But here is how it actually works. The IRS releases forms. They post them, and then they wait. They are not in the business of chasing you down to hand you a refund. Every dollar you do not claim is a dollar that stays with the government. So the system moves exactly as fast as you push it. And today, I am going to give you the push. Let us get into all 5 forms right now, one at a time. And I will tell you on every single one exactly who it helps the most, so that nobody watching this can say this is not for me. Form number 1 is the Senior Bonus Deduction claim. And this one alone has the potential to change the number at the bottom of your tax return in a way that is going to surprise you. Here's what happened in 2025. A new law passed called the One Big Beautiful Bill Act. Inside that law, buried in language most people never read, is a provision that gives every American who is 65 or older an additional tax deduction of up to $6,000. If you are married and both of you are 65 or older, that number doubles to $12,000. And here's the part I need you to really hear. This deduction does not replace anything you already have. It does not touch your standard deduction. It does not affect the additional deductions seniors have always received for being over 65. It stacks right on top of everything. So if you are a single senior with a modest income from Social Security and a small pension, stacking this new deduction on top of everything else may bring your federal income tax bill to zero, not lower, zero. And if you are a more comfortable retiree bringing in $50,000, $60,000, even up to $75,000 a year, you get the full $6,000 deduction. It only begins to phase out above $75,000 for a single filer and above $150,000 for a married couple. Now I want to ask you the question I asked at the very beginning. Did your tax preparer specifically mention the Senior Bonus Deduction when they sat down with your return this year? If the answer is no, or if you are not sure, that is the first phone call you need to make this week. Ask them directly. Did you apply the Senior Bonus Deduction for 2025? If they hesitate, if they look uncertain, you have your answer. And one more thing on this form that I need you to write down. This deduction is temporary. Under the law as it currently stands, it exists for 2025, 2026, 2027, and 2028, 4 years. After that, it disappears unless Congress extends it. Every year you miss it is a year you cannot get back. Form number 2, and this is the one where I see the most money quietly leaving the pockets of people who think they are doing everything right. It is the Social Security Tax Withholding Adjustment Form, the W4V. When you first signed up for Social Security, you were handed this form and asked how much federal tax you wanted withheld from your monthly check. Most people picked a percentage, thought they were being responsible, and never touched it again. But here's what most people do not know. Whether your Social Security benefit is taxable at all depends entirely on what the IRS calls your combined income. That number is your adjusted gross income, plus any non-taxable interest, plus exactly half of your total Social Security benefit for the year. If that combined number falls below $25,000 and you are a single filer, 0% of your Social Security is taxable. If you are married filing jointly and that number falls below $32,000, same result, 0. But you are still having a percentage withheld every single month based on a decision you made years ago when maybe your financial picture looked completely different. You are handing the federal government a free loan out of your own retirement check every 30 days. The fix is one form, the W-4V, available right now at ssa.gov. You fill it out in 5 minutes. You either reduce the withholding to match what you actually owe, or you elect zero withholding entirely if you expect to owe nothing. Mail it or fax it in, and your next check reflects the change. I have heard from seniors who got over $150 back in their monthly check the very next payment after filing this form. Money they had always been entitled to. Money that had been quietly leaving their account every month for years because nobody told them to update one piece of paper. Now I want to stop here for just a moment because we are about to get into form number 3. And form number 3 is the one I always get the most pushback on before I explain it. People hear the name and they immediately say, Andre, that sounds like it is for people who are really struggling financially. I am doing okay. I do not think that one applies to me. And I want to address that right now before you make the same mistake, because comfortable middle-class retirees are actually the ones this form helps the most. Not because they need it most, but because they have the most to lose by not knowing it exists. Stay with me. Form number 3 is the Medicare Income-Related Monthly Adjustment Amount Appeal, filed on the SSA 44. And the reason this one matters so much is because of one rule that almost nobody knows. Medicare does not use your current income to calculate your premium surcharge. They use your income from 2 years ago. 2 years. So if you retire recently and your income dropped by 30, 40, 50%, Medicare is still charging you a surcharge based on the salary from your last full working year. You are paying a premium today based on money you stopped earning before you even enrolled in Medicare. And that surcharge comes out of your Social Security check as a quiet monthly deduction. Most people just pay it without ever questioning whether it reflects their real financial situation today. The SSA 44 is a one-page form you file with the Social Security Administration when you have experienced what the government calls a life-changing event. Retirement is specifically listed on that form. So is the death of a spouse, a divorce, or any significant reduction in income. You file the SSA 44, you attach documentation showing that your income has changed, and Medicare recalculates your premium based on where you actually stand financially right now instead of 2 years ago. Most people pay that inflated surcharge for a year, sometimes 2 years, before they ever hear about this form. Because Medicare does not send you a letter when your income drops. They just keep collecting. That surcharge can run anywhere from a few dozen to over $300 a month on top of your standard premium. If you retired in the last 2 years and your income is significantly lower than it was before, this is the form you file this week. It is free. It is one page, and the savings are immediate once it processes. Drop a number in the comments right now. If form number 1 applied to your situation, drop a 1. Form number 2, drop a 2. Form number 3, drop a 3. Because I want to know how many people watching this right now are sitting on money they did not know they had. And I promise you the comments under this video are going to open your eyes when you see how many other people are in the exact same situation. Form number 4, and this is the one I told you about at the very beginning. The one with the highest dollar value for seniors who have been on Social Security for more than 3 years. It is the property tax credit form tied to your federal return, and most people have never heard of it because it sits in a part of the tax code almost nobody looks at. Here's what it does. If you are 65 or older and your property tax bill represents more than a certain percentage of your total household income, the federal government has a mechanism to credit a portion of that overpayment back to you, on top of any state-level property tax relief you may already be claiming. The calculation is done on a supplemental schedule attached to your main return. Your tax software will generate it automatically if the inputs are entered correctly, but only if your preparer or your software knows to look for it. Which brings me back to the question I asked at the very start of this video. Did your preparer ask about your age? Because this credit is age-gated. It does not exist for filers under 65. Your preparer has to know that you are 65 or older and that you own your home and that your property tax bill is a meaningful share of your income before this schedule ever gets generated. If none of those 3 things were specifically discussed when your return was being prepared, there is a real possibility this credit was never calculated. Ask your preparer to pull up your last return and confirm this schedule was included. If it was not, an amended return may still be possible depending on how long ago it was filed. Form number 5, and I promised you at the start that I was going to hand you what the system was hoping you never found. This is it. Form number 5 is the IRS Free File and Volunteer Income Tax Assistance Selection Form. And I know what you're thinking right now. Andre, free tax help is for people who cannot afford a preparer. I hear that, and I want to dismantle that assumption completely. The VITA program and the Tax Counseling for the Elderly program, which is the senior specific version, are federally funded and staffed by IRS certified volunteers who are trained specifically on the tax situations that come up in retirement, Social Security income, pension distributions, IRA withdrawals, the Senior Bonus Deduction we talked about in Form number 1, the property tax credit from Form number 4. These volunteers are not general preparers who occasionally see a retirement return. They specialize in exactly this. And the income limit for the Senior TCE program is not as low as you think. Moderate income seniors qualify. That means the majority of people watching this video right now likely qualify. The largest provider is AARP Tax Aid, thousands of locations nationwide. You do not have to be an AARP member. And here's the number I want you to sit with. The average fee at a chain tax preparation office for a standard retirement return is between $200 and $400. A return with 2 Social Security checks, a pension, investment statements, and a standard deduction. That return takes a trained preparer about 45 minutes. You are paying up to $400 for 45 minutes of data entry on a return type that a certified volunteer does for free. Not because the volunteer is less qualified on your specific situation. In many cases, they are more qualified because this is all they do. Go to irs.gov or aarp.org and find the nearest TCE location. Keep that $400. Put it towards something that actually matters to you. Now, here's the single idea I want you to walk away with today. Every one of these 5 forms has one thing in common. None of them come to you automatically. The Senior Bonus Deduction does not apply itself. The Social Security withholding does not adjust itself. The Medicare surcharge does not get recalculated because your income dropped. The property tax credit does not appear on your return unless someone looks for it. The free tax preparation does not show up at your door. The system is not designed to give this money back to you. It is designed to wait until you claim it. Being legally entitled to a tax benefit and actually receiving it are 2 completely different things. The only thing that closes that gap is information. And that is exactly what today was about. So here's your assignment this week. Pick one form from this list, just one. Make the call, ask the question, and then come back here and tell me in the comments which one you went after and what you found out, because I read every single comment, and your reply might be the thing that pushes someone else watching this video to finally make the call they have been putting off. If this helped you today, share it with one person in your life who was born before 1961. Not because they are struggling, but because the odds are very strong that at least 2 or 3 of these 5 forms apply to their situation right now, and they have absolutely no idea. Hit subscribe because this is what we do here every single week. I am Andre, and I will see you in the next one.